All right, it's a pleasure to be joined by Paul Foster from AMP Capital. How are you, Paul?
Well, Andrew.
Enjoying the
Thank you.
conference?
Yeah, it's going great so far.
So the title of your talk, which I really like, is Infrastructure the Holy Grail of SMSFs.
Yep.
Before we get to that, and we will get to that, why don't you talk us through infrastructure and the notion of it?
Sure. So when we refer to infrastructure in the investment sense, we're really talking about the assets that underpin the effective operation of society. So the assets that if they weren't there, society would struggle to operate effectively. So roads, airports, gas pipelines.
You're not talking about the M5. You're not talking about the cross-city tunnel. You're not talking about the ones that don't work.
M5's worked out okay. Cross-city tunnel less so.
Yeah,
but
right.
really the assets that if they weren't there, society would struggle to operate productively.
Yeah. And so how do they work? I mean, I can see how they work from an investment point of view,
Yep.
but how do they work within a self-managed super fund?
Yeah, so it's a relatively new area for self-managed super funds. The big industry funds have been investing in infrastructure for a long time. Institutional investors like AMP have been investing in infrastructure for a long time. And it's really a reflection of the fact that these are very long-term assets that suit superannuation funds and insurance pools very, very well.
So why has it taken so long for self-managed funds to get on board if other areas have been in them for a long time?
I think it reflects the fact that self-managed super funds themselves are still relatively young and formative as an industry. And there's still a lot of question marks about how a relatively fragmented industry, lots of capital in total, but how do you effectively organise and parcel up that capital to enable it to start to access some of these interesting opportunities?
Okay, with infrastructure, it doesn't, I'm guessing, I'm asking, it's not about, it doesn't matter where the money comes from, does it, as long as the money goes into them. So it shouldn't really matter if the self-managed funds are fragmented, as you say.
I think the big issue that matters is really one of liquidity. So these are inherently long-term illiquid assets, and that makes them very suitable, prima facie, to a superannuation fund. But really, within superannuation funds, you have beneficiaries and members that are at various stages of their own journeys and their own lives. So how do you account for the fact that you might have a post-retirement member and then you've got an accumulation member? They're all different with different requirements, and how do you parcel up and bundle up investments that make sense for them?
Okay, so at AMP Capital, how do you do that?
So we've got a couple of products that we've specifically built that are focusing on the self-managed superannuation fund market. I've touched on liquidity as one of the big issues and constraints. The way we've tried to address that is to build a product that we're offering to the self-managed superannuation fund market that combines unlisted infrastructure and all of its stability, inflation-linked characteristics with an exposure to listed infrastructure, which will provide liquidity. So we're bundling those two unlisted and listed exposures to infrastructure together as a way of trying to tap the best of both worlds and parcel that up and deliver it to that self-managed super fund market.
And so that's the way they can tap into that asset class?
That's the way we believe is a really effective way for them to tap into it. They can certainly tap into it through listed infrastructure securities as a standalone investment option. The same sorts of underlying assets, but what you need to understand is once you go into that listed environment, you are, whether you like it or not, exposed to equity market volatility and equity market beta, and that sort of undoes one of the key reasons why you want to be invested in infrastructure, which is that inherent stability that the asset class delivers.
Okay. How hard is it to sell this message into self-managed super funds?
Look, I think...
when I say sell it in, I don't mean that, like it's the... Although I love the phrase the Holy Grail, so... is it a case of selling the concept in?
I think the asset class itself there needs to be a lot of education about the characteristics. And there are a lot of attractive characteristics, but like any asset class, there are also inherent risks. And so people need to understand that full spectrum of positive and risk-based characteristics of the asset class before they invest. So we've got a job to do to educate, and then we've got a job to do in terms of showing people the different ways they can implement into the opportunity.
Okay, and with the infrastructure class, have there been any... And I was joking about, I meant the M5 when I was joking, meaning it just doesn't work because it doesn't move. I didn't mean that in terms of making money. Has there been any absolute, gangbuster successes or monumental failures that would, heighten risk or lessen risk for those interested?
It's all about diversification, right? So you're always going to have individual projects that do exceptionally well, and you're always going to have individual projects that don't do as well.
Okay.
Like any other form of investing, making sure you've got a well-diversified exposure across a cross-section of different types of infrastructure at different stages of their life cycle in different sectors is critical. So, we've been an investor in and an owner of Melbourne Airport since privatisation in 1997. That's been a fantastic investment over nearly sort of 18 years.
Okay.
There have been obviously high-profile projects in Brisbane and Sydney in the road space that have gone less well. Again, important to differentiate between those projects, which are greenfield construction projects, and operating brownfield infrastructure assets that deliver the sorts of return characteristics that a lot of superannuation funds find very attractive.
All right, well, let's get back to that question of the Holy Grail. Do you think infrastructure is the Holy Grail for?
Yeah, look, I think that's overstating it. It's I think it's a very interesting and attractive asset class that has a very important role to play in all types of superannuation and pension fund savings pools, including self-managed superannuation funds. But like any other asset class, balancing out its inherent attractiveness is the fact that it has got risks, and you need to manage those risks to get a good outcome.
Great. Okay, thanks for your time.
Pleasure.
Paul Foster,
Thanks.
beauty.
Thanks, Andrew.